Options Money Maker, another leverage market, and another awesome presenter. Thanks for being here, guys. Let me let Mark take it away.
All right, thank you, Joe. Hey, everybody, I appreciate you spending a little time with me today. I'm Mark Dannenberg. I am the founder and CEO of Options Moneymaker. I'm going to be trying to make the most effective use of your time today, because I think that this is something very powerful for any trader. Talk about technical patterns for options and futures trading. So what I'm going to share with you today is really good for options traders. It's good for futures traders. It's actually good for stock traders. It's good for buy and hold stock traders. So let me just get started here. First of all, myself and my trading team, we work together every single day on behalf of our community of traders. We're always working to find the most effective, refined ways for people to make money in the market. So I founded Options Moneymaker about 10 years ago. My personal mission is to teach, motivate, and inspire traders to achieve financial and lifestyle freedom. I've been trading for over 30 years, got extensive experience as a futures trader, as an options trader, and we've created a range of services to teach all levels of traders. Michael Kastner, he's the lead host of a live trading room that we host every single day, the full market day. It's a rarity, but we host the live trading room every single day, full market day. And members of our live trading room can learn how to identify great entry and exit signals. So it's one thing to understand how to use software. It's one thing to go through a training course to understand how to interpret entry and exit signals, but it's something else than to have actually the availability of a trading coach throughout the trading day in real time. And what we are doing is we're placing live trades in real time, and we're calling out those trades. We're calling out the signals in the room. Michael's an expert in options and futures trading as well. And also he's an expert in what I'm going to tell you about here, the AO strategy, as well as our Able Trend strategies. They're one of our partners in terms of providing good charting software. He's got over 30 years of trading experience also. And then Erin Rumley is an expert in our primary AO entry exit strategy, and she's the co-host of our live trading room. She provides an excellent learning opportunity also for new and experienced traders through our Profit Builder Plus education program. So I just wanted to give you a little flavor of who we are, and I'm going to show you three things today. I'm going to really keep it very simple. We are big fans, me in particular, myself and my trading team, but me in particular, I'm a big fan of keeping things as simple as possible. Confusion creates anxiety, and confusion will often cause people to just back away and not participate. There's no reason for people to be anxious, and we try to set aside emotions as much as possible by keeping things as simple as possible. So I'm going to show you three things today. I'm going to show you one simple, very versatile technical signal for entering futures, options, or stock trades. I'm going to give you examples of that. I'm going to give you examples of the simplicity of this technical signal. So I'm going to show you what the signal is. I'm going to show you how we've paired together two very simple technical signals. And then the third thing is I'm going to show you how you can learn this simple technical signal and use it for your own trading. So one of the things that I've encountered having traded for over 30 years, and I spent a lot of time, I spent 26 years as a senior executive with a Fortune 500 company, but had traded throughout all of that time. So when I left about 10 years ago, I decided to take what I had learned over those years and teach others. And one of the things I've learned is that traders and investors are always in search of what they consider to be the right strategy. Oftentimes, they're looking for the flavor of the month, the one thing that is new to them that they've never done before, because they're always just kind of milling around with strategies and not really making significant money. So whether it's covered calls or strangles or straddles, credit spreads, iron condors, debit spreads, buying calls, buying puts, futures trades, they're always looking for the right strategy. However, the number one key success factor for both investors and traders is how to time the entry and exit of a position. It doesn't do you any good if you understand all of the details about how to use those strategies that I mentioned, or all the details about the Greeks and all the fine details of options trading. It doesn't do you any good unless you know when to open and when to close a position for optimum profit. I don't care what strategy you're using, whether you're a buy and hold stock trader, whether you're a day trader buying calls, buying puts, whether you like covered calls. I don't care what strategy you're using. You have to have a technical signal that's going to say, this is the optimum time for you to enter a position, and this is the optimum time for you to exit the position. That approach will help any strategy be a winner. So a technical evaluation of recurring patterns is the most effective, non-emotional method for identifying entry and exit positions. Now, what we've done here at Options Moneymaker is we simplified the technical evaluation by simply taking two well-known key technical indicators that are available on most any charting platform, and we've paired them together, which eliminates the need for extensive, expensive, maybe even complicated software. I've probably owned at least practically every software package out there, and so many of them are so great, but it requires an extensive amount of work to really understand them and make them work. What we wanted to do is create something that was achievable and attainable by anybody, even with the most simple charting platform. So what we've done is we've taken stochastics, just a simple stochastics technical indicator, and paired it together with the awesome Oscillator, which is another widely known, widely used technical indicator. It was created by Bill Williams many years ago. And we've paired those together in a simple and profitable way to identify entry and exit trades. Now, the combination of these two indicators are going to identify your entry, they're going to identify your exit, and again, I'm going to show you several charts. You're going to see why it can be good for stock investors as well as options traders who are wanting to buy a call or buy a put or use one of the other spread strategies. They're good for ETF traders, and they're good for futures traders. We, every single day, are trading options and futures. So we're not trading stocks, we're not trading ETFs typically. We trade a few ETFs, SPY, DIA, we trade those, but mostly our focused attention, especially in our live trading room, is on trading futures and on options. Now, the cool thing about what I'm just about to show you here is it works with any time period. Shorter time periods are better for futures trading and day trading options. So you can use a 1-minute chart to day trade futures or to trade futures or day trade options. You can use a daily chart to choose longer term positions, as well as if you are more of a buy and hold stock investor. So I'm going to go through some charts with you here, but the AO entry exit strategy, that's what this is called, the AO entry exit strategy, stocks, futures, options. I'm going to show you an example of SPX because it's a great example for options trades, and that's what we use it for. I'm going to show you NQ. Now, we trade NQ every single day. That's the NASDAQ 100 futures. I'm going to show you a NASDAQ 100 futures chart, NQ chart. And I also want to tell you that we track and post on our website every single NQ trade that we place. And I'm going to share with you here in just a few minutes how well we've performed since we released this strategy, tracking NQ. Now, we could be trading pretty much anything, and I believe we'd have reasonably comparable results because I look at the charts every single day. But there's a limit to how much we can trade. We are trading in live accounts. Each of Michael and myself and Aaron are trading live accounts, and we're trading them in real time in our live trading room. I'm going to show you Amazon, a great chart to look at for stock as a stock example. I'm going to show you CMG. It's another great way to look at how effective the signal is for stocks. and I'm going to show you DIA as an example for ETFs. I know a lot of people out there like to trade ETFs also, and a lot of the questions that I get when I'm talking about this strategy is, well, does it work on ETFs? Does it work on ES as a futures? Does it work on bonds? Does it work on oil? Our experience, folks, is as extensively as we have used this, is it works on most any derivative, any underlying equity that you want to trade. All right, so I'm going to back up here just a minute. Hold on. And I'm going to jump over to a chart. Okay, so here is Amazon. This is an Amazon chart. This is a daily chart. So first of all, let me point to this histogram down here. This is the awesome oscillator. It's called the AO, the awesome oscillator. And it was created by Bill Williams many years ago. And it is designed to indicate what the momentum of the market is. So you've got rising green bars indicating that momentum is moving to the upside. You've got declining red bars, meaning momentum is moving to the downside. Now that's a very, very simple overview of what the AO is. And then right here in the middle is stochastics. So this is stochastics. Now the settings, stochastics are named differently on many different platforms. The settings are what are important. It's a 14.3.3 setting, 14.3.3. And what we're looking at here is the crossover of the K line over the D line. So the blue line is the K line, the red line is the D line. And whenever the K line, the blue line, crosses above the D line, the red line, it indicates that there is the beginning potentially of some upward momentum. And when it crosses below the D line, when K line crosses below the D line, there's some indication that there may be some beginning bias to the downside. So what we do is we pair these together. So here's a very, very simple explanation of this. When you have both stochastics, K and D, trending lower, and that corresponds to a red AO indicating perhaps the beginning of some decreasing momentum, that is a time period that we would buy to open an option put. We would go short on a futures trade, or we may want to exit a buy and hold stock strategy trade that we might be holding on to. Because what that's telling us is that there's strong potential for some movement to the downside. And do you want to continue to hold? Are you holding a position that will benefit from a movement to the downside, or are you going to be unfavorably challenged in that position if it continues to move? So let me kind of randomly pick a few here. We're going to start with today, and we're going to kind of back into it. On Amazon, what we saw starting yesterday, remember this is a daily chart, is yesterday was the first day that we had a red AO and declining stochastics. So yesterday, Amazon opened at 1656 and it traded down to a low of 1612. So there was a 40-point move on Amazon yesterday, and we could easily take advantage of that by buying a put, or maybe getting rid of the stock if we owned the stock. But we could take advantage of that because the signal presented the opportunity. So if we back up to a period when stochastics was down at the bottom of the range, once K-line had crossed over the D-line to the upside and we saw a green AO come on, that's an opportunity to buy the stock. And so in this case, the opportunity to buy the stock was presented on December 28th at 1473. 1473 was the open of the daily bar. And then we would have reversed that trade and been out of it when the signal reversed and the price went up to 1615. It actually went higher than that. We are not, with this technical signal, trying to call tops and bottoms. We're not trying to identify the highest high or the lowest low. I've done research around that for years, and I'm happy just capturing a nice profit out of the middle of that segment, of that entire movement from the lowest low to the highest high. And what we're looking for instead is to use this set of signals that's telling us we've mostly confirmed that there is a bias to the upside. So now would be the time to jump in and take advantage of that. And then we're going to close that trade when the bias reverses. Now, there are some other details around all that, but I'm giving you a high-level overview of this right now because I think it's a very, very powerful approach for you to use, whether you're an options trader, ETF, futures, or a stock trader. So again, you would have been in that trade on 1228 and 1473. You're out of that trade on 114, and you're out at 1615. So about 180 points of movement up there. If you're an options trader and you're buying a 50 delta, that's a nice 90-point move on an options trade. There's great leverage there. And you can continue to back up and look at the movements. Not 100% of them work out, but on those situations where they don't work out, you've got a very small loss or drawdown on the position, and you just move forward and you look for the next opportunity. But that's true with trading any type of strategy, any type of signal or momentum indicator. Here's another one that was to the upside. You're in November 2nd. Bar opened at 1678. You're out of the trade here at 1656. So that one did not work out if we held all the way to the next cycle. However, you can see here that if we were in at 1678, it traded up actually to a high of 1784. There's an opportunity then to lock in a profit when you see the signal start to weaken, which is always almost always starts with stochastics crossing back to the downside. So if we'd taken it off there, we would have ended up with a reasonable, not a huge profit. But that's an example of one that didn't work out as well. But even if it hadn't worked out very well, the very next cycle, which is right here now confirmed by AO and stochastics corresponding, you're in short at 1656, and it traded all the way down to 1420, 230 points. The next cycle starts at 1539. So, you know, you've got about 110 points of movement cycle to cycle there. All right, so let me jump to S&P 500, SPX. This is frequently what we use for options trades, and I'm going to jump to a 30-minute chart, because what I want you to also understand is that this approach works whether it's a 1-minute chart, 10-minute, 30-minute, or daily chart. You can look at any time period really, and you can apply the same exact principle of the stochastics and AO combination and coordinating with each other. Now, the shorter time periods, you're going to get into some choppy movements. And that's to be expected. The longer time periods, you know, it's more like an ocean liner turning around in the middle of the ocean. Just takes a little bit more movement. But you can go back and look at your charts, folks. Just put stochastics and AO on your chart and just start looking at some of the peaks in the movement. You know, here's a one at 3 o'clock on the 16th of January where the sorry, it was actually at 3:30 because stochastics had not actually crossed here. It looks like it has, but I'm looking at the K and D values over here. So let's see, where was that? Right here. So on the next bar, now we have red and confirmed stochastics. You're in that trade at 26.23, and it traded down to a low of 26.06. You know, that's great profit, especially for an options trade. And you may want to continue to hold, or you may want to just lock in your profit. If you held all the way to the next cycle, you're out at 20 at the open of the bar, 26.21. Remember, we were in at 26.23, so that's only a 2-point profit. There are ways to lock in your profit, of course. You don't need to wait for the entire cycle, but as long as the position is still giving you a profit and still continuing to trend favorably for you, your absolute exit is on the confirmation of the next signal. So you've got a reverse signal. Your first potential exit is when stochastics reverses against your position. And of course, at any time you want to use a trailing stop on a futures trade or some sort of a percentage return approach on an options trade, you can just take that trade off and then look for the next trade. Now I'm going to back up here to a 5-minute chart, show you something similar here. Here's a great trade right here. This was today at 12:05. So stochastics crossed over to the downside. We're coordinating at 12:05 with a red AO. We're in that trade at 26.41. I'm rounding off. 26.41 was the open of the bar. We're actually not done with that trade yet. It traded down to a low of 26.27, and that all happened between 12:05 and that low of the bar was 1:15. So an hour and 10 minutes for that pretty nice sizable movement. The reason I say we're not out of the trade yet is because the next AO cycle has not started. You could be out of the trade if you wanted to. When stochastics crossed up, you would have left a little money on the table. But again, we're not trying to call tops and bottoms on these. We're just trying to grab consistent profits multiple times a day or week or month. Here's an entry right here. I'm just kind of backing up in time. Confirmation to the upside on a green AO coordinating with stochastics. You're in the trade at 26.37. Trades up to a high of 26.41. Now, that's only 4 points. And when on the rollover of stochastics, 26.44 is when you'd be out on stochastics. And so you're going to have about 7 points of movement on that, 26.37 to 26.44. And there you go. What you're seeing here is on the shorter time periods, the profits are going to be more rapid. The profit amount is going to be a little smaller, but every once in a while you get into a really nice run. You see here, this is what happened yesterday. This was an awesome run to the downside. At 10 o'clock yesterday morning, the AO printed red, but stochastics had not crossed. At 10:05, stochastics crossed, so now you've got a confirmed signal. You're in at 26.53, and if you went AO to AO, you're out at 26.14. So you've got almost 40 points, 39 points of movement on that. So I could show you time period after time period after time period, cycle after cycle. Not 100% of them work. When they don't work, it's just one of those expenses of your trading business, and you take the trade off and you look for the next cycle to get into. You're going to have a high win-loss ratio on this type of trading, and it's just something that's very easy for anybody to trade. I want to take a look at NQ. NQ is what we trade frequently, and NQ is what we track. We've chosen NQ as a futures derivative to track performance, and we track every single trade. We track the detail of the entry and the exit. It's available for anybody to view on our website. You don't have to be a client. You can take a look, validate the trades, go back and look at the charts. You're going to see exactly what we saw. You're going to see why we took the trade. You're going to learn a lot just from doing that. And then we can certainly help you in our live trading room to learn even more. Now, today has been extremely choppy, moving back and forth significant across the moving averages. But you can see here that there have been some really nice opportunities. Here at 10:40 this morning, we got confirmation with stochastics pointing lower, as well as stochastics having crossed over. Stochastics crossed over pointing lower, and the AO printing red. You're in that trade at 67.01. If you held it all the way to the AO reversal, that'd be 11.35, and you're out of that trade at 66.82. So almost 20 points of movement, and that's on a futures contract, one contract at $20 a point. That's a $400 profit right there. And then you'd be right back into a long trade by going long at 66.82 because we've got stochastics crossing up. We've got the AO green. So you're in the trade at 66.82 and you're out of the trade at 66.97 because that's when stochastics cross back down and the AO reversed. So about 15 points on that, and that's at 12.10. So the first trade I identified for you here started at 10.40. The second trade ended at 12.10. So you've got about an hour and a half, and you've made 35 points in that period of time. 35 points on NQ is about $700 trading a single contract. And so what's so cool about trading NQ is it's all scalable. You can trade as many contracts as your personal risk tolerance allows, as well as the size of your account. So I could go back to multiple, trades, multiple time periods here. You can take a look at them. But this is all, real time, especially the trades that are today. And you can see there are periods of time that are significantly more choppy than other periods of time where it's a little more sluggish. And then there's periods of time where it just kind of hangs around the moving averages. And stochastics is just crossing back and forth and back and forth. Those are generally periods of time to stay out of. But if you did get into those and you took a trade, say, to the downside and almost immediately had to reverse it, you're going to see in those periods of choppiness right there, very, very tight choppiness, that your loss or your drawdown on the position just isn't very big. So we make it a practice to pretty much take every signal throughout the day. And we're going to, on NQ, we're going to average around 13 trades a day. We're trading those live every day. So let me give you another example here. Let's jump to a ETF, DIA. Now, if I was trading an ETF, I'm going to go out for a little longer time period. I may look at like a 60-minute chart on DIA because I want to hold this a little bit longer. It's not as cost prohibitive to get in. I can leverage a bit more with more contracts. So I'm going to use a longer time period. And you can see the same opportunity presents itself, although it doesn't always work out. But here's one of the most recent opportunities where stochastics was well up into the top of its range, running at about 94%, 95% on a 100-point scale. So at 3:30 on the 18th, which I believe was last Friday, we have stochastics crossing down. We have a red AO, and we're entering DIA at around $246.50, and the cycle reversed when it was at $246. So it went from 246. So that one was flat. So let me just look at this again. We're in at 246. If you hold the full cycle, you're out at 246. Don't really lose anything, but it did trade down to a low of 242. So 4-point move down on DIA, and you could have captured the majority of that if you'd gotten out at stochastics cross back to the upside. So hand in hand with AO and stochastics, and keeping an eye on when the AO reverses and when stochastics reverses, those are your cues as to when to get out of the trade. So the most important part about trading, in my opinion, in my 30 years of experience, is identifying the entry. Now, the entry is really, really simple with this approach. It's so ultra simple. Anybody with these two technical indicators on their platform could follow the entry. That's a no-brainer. The exit is just 1 degree slightly more complicated, but it still is very, very simple. It's either that you're going to hold the trade until the next AO reverses, until the down cycle, short cycle reverses and shows a long cycle, or you're going to exit the trade when stochastic reverses. Generally, you're going to capture a bit more of the profit overall when that happens, or you're going to have some sort of a predetermined exit that will lock in a profit for you. But what this does for you is it allows you to get into trending trades as well as counter trend trades. So you can see here, for all practical purposes, that starting back on 12/24, we've been in a rising pattern. Okay, we've been in an overall rising pattern. You go back to the lows on 12/24, and you can see here that we've very easily been in an overall rising channel, and we're moving between support and resistance of that channel. Some people can only see the rising trend, and they don't see the opportunity to take advantage of what would traditionally be referred to as counter trend trades. And so this is a counter trend trade here, but it gives you an opportunity to take that trade, because now stochastics had crossed back up, crossed down, crossed back up, and now it's crossed back down again on a red AO. There's an entry signal right there, and there's a counter trend trade that allows you to get in to this DIA trade short at 232.20, and stochastics reversed at 228, so about 4 points. So it works on every time period. It works on pretty much any stock, any ETF, any futures contract, anything you want to trade options on. I'm going to show you just a couple more here, and then we'll finish up. CMG is another great example of a stock. On stocks, I'm typically looking at 60-minute or daily charts, sometimes the 30-minute chart, but daily is a great place to be on stocks. So you just go back in time, work your way back, and you can so easily see the patterns here of when stochastics align with the AO. So the AO is green, stochastics is pointing to the upside, and you can see that it took off after that, and you can see you missed a little bit of that initial movement. I don't care about that. It's not what I leave on the table that's important to me. It's what I capture and put on my bank account that's important to me. And in this case, CMG, you would be in that trade at the open of the bar on 12/28 at $415.08. And that cycle is actually not complete yet, but you could have been out of it at first when stochastics crossed back down, which was right 94.40, yep, 96.40 right here. So the open of the bar on the 11th of January, you're out at 507. So you're in at 415, you're out at 507. So that's a really nice, healthy move, whether you're a stock buyer or a buying a call option. You can go back and you can look at any of these. And a good way, if you're not familiar with this yet, a good way to think about it is look for when stochastics was above the 75% line or below the 25% line, and look at how those movements followed through. And if you have one that doesn't follow through and in fact results in a loss for you, look at a series of trades, like 10 trades, how many of them were losing trades, how many of them were winning trades. I think you're going to find that the vast majority are going to be winning trades and are going to give you a more significant profit opportunity than the loss that you may incur on a losing trade. But you are going to have losing trades. Anybody who tells you differently in any kind of technique is just not telling you the truth. So you are going to have some losing trades, but the losing trades are typically pretty well contained. So that's CMG. Let's see here. Did I have one more I wanted to share with you? It was on. We'll look at one other futures. We'll look at ES, S&P 500 futures, and it's pretty much the same thing. You're going to see these rolling patterns on the AO. You're going to see these rolling patterns on stochastics, and you're going to find that it corresponds very nicely to movements in the price. So although in this period of time we are trending higher, you can see these movements lower, movements higher, movements lower, movements higher, movements lower. All of those are opportunities to capture a quick profit if you're a very active trader. Now, if you're not an active trader and you're just looking for something that you can do easily but without a considerable amount of time, my recommendation would be trading options using this and using a daily chart. Sometimes you have to wait, but sometimes you have to wait a bit to get your entry, but they're generally going to be pretty profitable for you. We have a service at Options Moneymaker where I'm actually waiting right now to buy to open a put on the S&P 500, because you can see here that we are still in a rising cycle on the AO, but stochastics is now strongly pointed lower. Stochastics, more often than not 100% of the time, but more often than not, will precede the AO, and we're looking for the AO as confirmation. And you can go back and look at the number of times that this pattern has presented itself on the S&P 500 and what the follow-through has been. Here was the crossover confirmation from the AO, and the S&P 500 went from 2663 actually down to a low of 2346, 220 points basically. You would have been out of that when stochastics and AO crossed back up, been out at about 24.98. So huge opportunities, especially if you're trading options, you're buying at the money with a 50 delta. You're going to capture more than 50% of that, but just at a minimum, you capture 50% of that move using a 50 delta. And then the most recent cycle we've been in, you can see evidenced right in December 28th, and it's been rising since. You go back and look at all these more shallow stochastics. Sometimes they will play out. They're not as strong as the ones typically that are above 75% to the downside, or here when stochastics is in the middle of the range. That can end up being a good trade to the upside, but the strongest ones are when stochastics is well above 75% and you're going short, or below 25% and you're going long. So I'm right now waiting to alert a trade that we're going to be taking in one of the services that we offer. I know it's going to be a put on the S&P 500, and I just don't know whether that red AO is going to present itself later today, whether it's going to present itself tomorrow. Sometimes the bar will change in the middle of the print, but if it's there tomorrow, we'll be going short on the S&P 500. Okay, so that's an overview of the AO entry strategy, and I really wanted to keep it very simple for you because I want to be respectful of your time, first of all, and I don't want to overcomplicate it. It is one of the simplest strategies you could use, and it is the simplest entry exit strategy you can use. Doesn't matter what you want to trade. So the AO entry exit strategy, now we did a ton of research on this in comparing technical signals, pairing together different technical signals, until we finally released this live to our community of traders. We started with our live trading room, and we released it as an advanced trade entry exit approach to trading. We released it in early September of last year. So we've been trading it live and tracking it live for just under 5 months. We did a ton of analysis and research prior to that for about 18 months, but we like to make sure that we've got everything tested and everything really confirmed before we present it to our community of traders. We host a live trading room every market day from 9:30 to 4 Eastern, and we trade SPX options and NQ futures in that trading room. AO signals are actually identified throughout the market day by Michael and Aaron primarily. When I'm in there, the three of us are identifying those signals, and our traders can follow right along with us. Now, as I mentioned, we track the performance of the NASDAQ 100 futures NQ. We needed to find something, track something that we would be comfortable tracking and trading, and that's what we settled on. We could be just as easily doing this on ES or SPX options, but we trade NQ futures, and we post it on our website. So I just want to share what the results are as of yesterday. This slide was put together yesterday. Starting September 4th, that was our first trade, through January 23rd. Yesterday, our performance is $67,050. That's trading one NQ contract using the AO entry exit strategy. That's trading one NQ contract, which requires $500 to put on the contract at our futures broker, and then of course we recycle that. We're trading about 13 trades a day. We average about 13 trades a day, and we're averaging about $745 of profit per day per contract. So this is where the AO entry exit strategy gives you an opportunity to scale. It gives you an opportunity to increase to 2 contracts or 5 or 10 contracts, whatever your personal risk tolerance is. So it's scalable to your account size and your risk tolerance. And the thing about the live trading room and the AO entry strategy is it is accessible to people who don't have a lot of time. If you're thinking to yourself, well, I don't want to spend all day in a live trading room, you don't need to do that. We average about 37 points a day on NQ. Each point is worth $20. We average 37 points a day. You could trade and take just 5 points per day, which might be a single trade, it might be 2 trades. You can make just 5 points per day in a limited amount of time that you have to trade, and that averages out to about $26,000 a year of income. So we have a lot of part-time traders in our live trading room. So just because we are open from 9:30 a.m. Eastern to 4 p.m. Eastern doesn't mean that you need to spend the entire time in there. You can take advantage of the AO entry exit strategy however much time you have in the day. So my personal opinion here is, and first of all, I want to thank you for spending some time with me, but I think the best opportunity for profits for any trader to earn profits in 2019 is in our live trading room. And the reason is because when you sign up for the live trading room, we include the AO entry exit strategy education module free. That's part of signing up for 1 month of trading in our live trading room. But in addition to that, you've got full day access to our coaching team. So if you have questions, you want clarification, they're available to answer those questions. We're going to call out AO strategy trades, and there's a few more details that you really start to learn about the AO strategy, and we identify those for you. You can ask questions immediately, and we'll tell you when we're taking a futures trade on NQ. We'll tell you when we're taking an options trade on SPX. We've also got 2 other services, Profit Optimizer and Freedom 5 trades, which I'm not going to go into explaining right now, but those services are included in a live trading room subscription for a month. And then we've got a community-wide Q&A that we host twice a month, where anybody can come into our community-wide Q&A who's a subscriber and ask questions for clarification for their learning, just advancing their own knowledge about their personal trading. So a subscription to the live trading room is $595 a month. I mean, your only real commitment to this, if you wanted to try it out, is $595. After a month, you don't have to continue if you don't want to, or you could sign up for the next month and you could just continue to sign up as often as you want to. It can be a recurring monthly fee. So compare $595 a month to the current average daily profits on just one NQ contract of $745 a day. Now, I can't guarantee that that average on NQ is going to remain, but that's what it is now. $745 a day is our average against $595 a month expense, plus you get all the benefit of access to 2 to 3 coaches throughout every market day, and the other services. A Profit Optimizer service, by the way, I'm not going to get into it right now, but we should make about $10,000 on that service, and it's included in the in the live trading room subscription. So if you're interested, you can sign up for the live trading room or explore more information about futures trading, the AO entry exit strategy at optionsmoneymaker.com/futures. That's optionsmoneymaker.com/futures. And you can always reach me at mark@optionsmoneymaker.com if you have a question.
And I just sent the link so that you can follow up on that great offer. If you want to send an email, you can always do that as well. Can you repeat the email address?
My email address is mark, M-A-R-K, at optionsmoneymaker.com. And the website, if you want to go check out what I've been talking about, is optionsmoneymaker.com/futures.